This is David Perales, President and Chairman, Foundation Study of Cycles. I'd like to welcome you to my brief presentation on FSC Baradine's signal. FSC Baradine is actually evolving disruptive technology for traders. I started this work personally in 1970-71, so it's been 43 years in the making, almost as long as Edward R. Dewey ran the Foundation for the Study of Cycles. The following slides of our internal Baradine price studies demonstrate vividly what we now have come to believe and understand to be a discovery of an unknown signal of an unknown origin, possibly Edward R. Dewey's something out there, which he was searching to find prior to his death. The results of this current research provide, at the very least, preliminary and compelling empirical evidence of the possibility of a planetary control mechanism of the equity markets, if not of all FSC cyclic recorded phenomena from 1941 to the present. The Baradine signal showcase you're about to see, you will see the forecasted price line signal in action as it unfolded live over the period of time shown in the Baradine Traders Group on live sessions, which are in a recorded archive initiated in WebEx on September 27th of 2012. For a short explanation of the terms, you will see the terms primary and secondary. The composite output of Mercury, Venus, Mars signal is considered to be the main signal, primary signal, and the output's mirrored values to be the secondary signal. Axis adjustment. Because the composite signal output is based on average historical cataloged planetary momentum values and therefore not trend adjusted, the graphic output sometimes needs to be secondary graphic and or axis adjusted to fit the current observed trend. All predictive price models shown here were generated with actual price data from January 1st of 2012 removed from the model. These projections are all therefore a forward walk out of sample, now 2 years predictive series, which we're still using in the Baradine group. No back testing is necessary. The blue line you will see is the actual close price of the asset. The red dotted line is the Mercury, Venus, Mars forecasted rate of change output or its mirrored value. The black line is the 5-day simple moving average of the dotted red line, the precasted price signal price line itself. This first study is the Dow Jones from 827 of 2012 to 325 of 2013, a period of approximately 7 months. The red line again is the red line is the rate of change. The black line is the moving average, 5-day simple moving average of the red rate of change line. The blue line is the actual price as it unfolded live in session. This is what a zoom looks like of that period. This was the precasted price line prior to the price happening. This was the actual price as it unfolded. And here's the comparison. The second study for the Dow is 325 of 2013 through 9/9 of 2013, again a period of approximately 6 months. This is the composite with its black 5-day moving average line or the precasted price line. The blue is the real price. Here again is the precast. Here again is the actual price as it unfolded live. And here's the comparison. The last study for the Dow is the period from study 3 for the Dow is from October of 2013 to January 2014, period of a couple months. Here again is the close-up zoom of that area. Red line, precasted line, and price line. Precasted price in advance, price as it happened, comparison. The final study, which takes us to the current period, is from January of 2014 to May of 2014. Red line, Mercury, Venus, Mars, rate of change, predicted output. Black line, 5-day moving average of the predicted output or precasted price line. Blue line, actual price. Precasted price line, actual price in comparison. Now let's look at S&P 500. Very similar approach. Study 1, March of 2013 through September of 2013, approximately 6 months in duration. Zooming in, we see the red planetary signal line, the black 5-day moving average of the red line, or precasted price, the actual price, again precasted price, actual price, comparison. Study 2 for S&P 500. This was primary signal with axis adjustment to fit the trend. Excuse me, September of 2016 through September 2013 through January 2014. Again, a period of approximately 3 months, 4 months. Here we have a zoom of that area. Red line, precasted rate of change. Black line, 5-day moving average. Blue line, actual price as it unfolded, live in session. Precasted price, actual price, comparison. Study 3 at S&P from January of this year to the present era. Same idea. Red planetary trace line, black 5-day moving average line, blue price line. Prediction, actual, comparison. We'll go a bit quicker through these since you must have the idea by now. This area for T-bonds is January 2012 to May of 2013. A much longer period for the signal to hold its shape, I guess you'd say. There's the precast, there's the actual, there's the comparison. Then, the last 4 months up until almost present time, we have T-bonds axis adjusted to adjust for the current trend. Again, composite with its 5-day moving average against the price as it unfolded, precast, actual price, how it came out. Soybeans is an interesting study. This actually held its signal from January of 2013 to May of 2014. You can see here was the precasted price line by itself, which we had 2 years ago. Here's what happened with soybeans. Here's the comparison. Wheat, again an interesting study from July 2013, almost a year now all the way to 5 of 2014. This is wheat study 1. Here's the precasted price line. Here's the actual price. And here's the comparison. Remember, this study was in place 2 years ago, September 2012. Corn was a bit more erratic to track, but the same idea holds. First period, precast, actual price, comparison. Second period, a lot of sideways action. Zoomed in, precast, actual price, how it came out, comparison. Third study, zoomed in, precasted price, actual price, comparison. Then corn went into an extremely erratic sideways motion for a long period of time. And those of you trading corn remember this, but the signal clearly showed the sideways motion. Signal, precasted price, actual price. Sideways, down to sideways with a recovery. Coffee, another interesting study. Study 1 from May of 2012 to November of 2012. Again, precast and rate of change lines. Precast by itself, price by itself, how it came out. Axis adjustment necessary to fit trend. Zoomed in. Precast. Actual price. How it came out. Axis adjustment needed as coffee continued its descent from June of 2013 to January 2014. Zoomed in. Precasted signal. Actual price. How it came out. Comparison. Then coffee shot up. All required was an axis adjustment, and we have this picture here. Precasted price, actual price, and how it came out. Sugar, from June of 2012, 6-month period over 6 months, to December of 2012. Same idea. Rate of change lines red, black precasted price line, real price line, how it came out, starting its descent. Second period, study 2, January 2013, an 8-month period to October 2013. Note how the signal clearly indicated the price motion in January to February into March. Price precast, actual price. Sugar obeyed its signal perfectly. Secondary axis adjustment for the period from February of 2013 over a year and 2 months now, into the present time. All is required was an axis adjustment. Price precast, actual price, how it came out. A lot of sideways action now in sugar. Live cattle, same idea. Composite, price precast, actual price, comparison. This is truly what we believe to be a price signal. There are no technicals here, no cycles, nothing except historical cataloged values of Mercury, Venus, Mars in reference to the price of the asset under study. Live cattle, sideways motion again, similar to corn. Very erratic, volatile, jumpy market, as reflected in the precasted price in advance. That's the price. That's how it came out. Then axis adjustment was necessary because of the uptrend in cattle. As you can see clearly, the data we use is not trended. So we adjusted the axis, and sure enough, for this period of time from December, almost 4 months, 3 months, and through March, here we go. Price signal, price obeys. Comparison. The final period now up to the current period. Very staccato motion in the price. Extremely volatile, but extremely responsive to its signal. There's the signal. Price obeys. These data, by the way, at this time are all based on the close values of the markets, and they're based on the cash values of the markets. These signals can easily be transferred to ETS, which is some of the things we study, and futures and options that we studied in the Paradigm Traders Group live. Here's gold. Very interesting study. January through August, over 7 months. There was a signal for gold based on London PM fix. Here was the price signal, the precast, 5-day moving average of the rate of change. Here's the actual price, and here's how it came out. Comparison. Then followed 3 months, primary signal, price precast, actual price, comparison. November of 2012 to almost March of 2013. Precast downdraft, there it is. Here's the price. Here's the actual price. Here's a comparison. So trading this is like trading the price. It's a no-brainer. If you got the price, we need stochastics, technicals, etc., etc., etc. Secondary signal here, showing the bottom gold reached in July. Price precast, actual price. Price precast, actual price. How it came out. Then our period here where gold touched the same bottoms. Again, this period is about 8 months. Price precast, clearly showing the bottom and the subsequent recovery. Actual price, precast, actual price. It's like that old commercial. Is it real or is it Memorex? There we go. How it came out. Silver. January 2012 to January 2013. 1 whole year. Price precast. Price itself. How it came out. Then axis adjustment was necessary for the decline in silver. Price precast. Actual price. April to October. Again hitting the bottom, bouncing off the bottom. Price precast. Comparison. Recent period. Precasted price signal. Price obeys. How it came out. Crude oil. Composite. Signal. Price. Comparison. Crude oil secondary area August through April 2013. Composite. Price signal. Price response. Price signal. Price response. crude oil, July through December 2013, composite, price signal, price response. How it came out. Current period, composite, price signal, price response. Price signal, price response. Comparison. Dollar index, extremely interesting study. Here we have a period from December of 2012 all the way through into January 2013. I'm sorry. December 2012 to 13. Over a year in any event. Composite, price signal, price response. Dollar index price signal, dollar index price response. January 2013 through March of 2014. 14 months. Same picture. Dollar index axis adjusted period now. Fit current trend. Price signal. Price response. USD JPY. February 2013. 9 months to November 2013. Composite. Price signal. Price response. Signal, response. Primary axis adjusted period, November through February. 3 months. Composite. Signal and response. Signal and response. How it came out. Current period, USD JPY. Composite. Signal, response. Signal, response. Euro Japanese yen. June 2012 to March 2013. About 6 months. Composite. Signal, response. Signal, response. Period February to July 2013. Composite. Signal, response. Signal, response. May through November 2013, composite, signal, response. Current period, axis adjusted, composite, signal, response. Price signal, response. The original Baradine assets cataloged in March of 2013, after our inception, when we first studied only gold in the Dow in September of 2012, these were the original 15 assets agreed upon by the original Baradine group. They include the Dow, the S&P, the T-bonds, 30-year, soybeans, wheat, corn, coffee, sugar, live cattle, gold, silver, crude oil, dollar index, USD JPY, and Euro JPY, which you've just seen, the signal and response. We now have cataloged additional assets, indexes, fixed income, the Shanghai, the DAX, Russell 2000, Nikkei 225, the Hang Seng, The FTSE, the New York Stock Exchange itself, NYA, the NASDAQ 100. Fixed income, we've added the T-bonds 10-year and 7 to 10-year ETF. We've also cataloged stocks and ETFs, which are being traded as assets within the group. Cisco, Citigroup, ExxonMobil, Google, Intel, JP Morgan, Lindsay, Microsoft, Priceline, Regeneron Pharmaceuticals, Rockwood Holdings, Sears Holdings, Wells Fargo, Southern Company, Simon Property Group, and Verizon. We've also started to catalog styles and precious metals, large cap growth, large cap value, mid cap growth, mid cap value, small cap growth, small cap value, emerging markets, and EFA, precious metals. Of course, we have Gold Miners Index and the Gold Miners ETF. Sectors cataloged now include consumer discretionary, consumer staples, financials, industrial materials, technology, healthcare, the REITs, utility, energy, and telecommunications. Joining Baradyne, the Baradyne Traders Group, Global Group, meets twice weekly in live online WebEx sessions on Mondays and Thursdays at 4:30 p.m. Eastern USA time. All meetings have been recorded and are available for documentation and later review. We also host a once-weekly early adopter Baradyne Trader online training discussion forum, open discussion, with recorded meetings available on Thursdays at 3:30 p.m. Pacific USA time. The Baradyne recommended trades on the 15 main Baradyne asset catalog are emailed twice weekly after each meeting with the exact entry and exit dates for the official Baradyne trader recommendations on the original 15 Baradyne assets: Dow, S&P, T-bond, soybeans, wheat, corn, coffee, sugar, live cattle, gold, silver, crude oil, dollar index, USD, JPY, and Euro, JPY. In the Baradyne Yahoo groups, all 50 plus cataloged asset worksheets, Excel worksheets as used in the meetings, are available for personal download, study, analysis, as well as all the trades that are generated for buy sells on the other assets cataloged I've just mentioned, as well as member-driven commentary postings. I hope you've enjoyed this preview of our Baradyne work. I'd like to remind you all contents you've seen are copyright by FSC 2014. We reserve all rights. And Baradyne is a registered trademark of the FSC L3C. We hope to see you in the meetings, and best trades.